Hey, good morning. This is Metzky with Driving Markets, driving while talking about markets. Let's kick off. So you've got GDP coming out from China. Now that is a big number. Remember, China came out of the lockdown and it went on to a jump, and then so the markets was all moving up. The economy was doing well, and all of a sudden it came to a pause. Now that pause has caused concern in financial markets, quite simply because China is the number 2 economy, but hasn't caused enough concern to make equity markets drop. So therefore, what they're doing is they're ignoring and disregarding any bad news. The GDP is going to come out pretty positive in China. They're expecting a number of around about 7.1%. Okay, remember that number there is going to be slightly exaggerated, not including Chinese lies, of course, but it's going to be slightly exaggerated simply because that when you've had a lockdown and you've had an economy that's slowed down, all of a sudden you come out of into a boost and the economy goes on full steam, then obviously the GDP, the gross domestic product, is going to be inflated. Now we all know that China tells lies in any case because they want to make out that the communist regime is the most successful, better than capitalism, and they never fail. So anything come out of China, you've always got to check 2 times, 3 times, maybe 4 times, and even after that, take it with a pinch of salt. So you can expect a pretty aggressive number coming out of China as far as the GDP is concerned. Now, China is overall going into a recession. I've spoken about this several times on YouTube and on Instagram and obviously on TikTok, and I'm looking at China overall. Its local economy is slacking. Its global sales are slacking. Exports are down. Its property market's in tatters. Remember, China is number 2 economy in the world, and yet it is failing. It's falling and likely to go into recession. Could be a Japanese style depression for 20 years. Japan now is only just coming out of this, where Japan's got some solid bull growth going on there. It's got cheap currency, it's got low interest rates, and the stocks and shares are moving up significantly. It's becoming a sought after market. So if you're going to look for a true bull market, then look at Japan in the Far East. Now, if you look into the West and look at America, America also tells lies. So you've got lies in Asia and you've got lies in America. You've got the Bureau of Labor Statistics, you've got the analytics, you've got data processing, you've got ADP, all the numbers coming out all seem to be manufactured numbers to give Joe Biden the best possible look he can have leading into the 2024 elections. Things are not as robust in the States as they're made out to be. Ask the regular businessman in the street. The regular businessman is suffering. He feels as though there is a recession. But the top 7-8 companies, the huge mega tech stocks in the US, is what's driving the NASDAQ higher. They make up 55% overall of the NASDAQ and 30% of the S&P. So any movement at all in those stocks upwards is obviously going to drive those indices higher. However, if any of those companies were to fail, then that would be having a significant impact overall on the relevant return or return on investment or growth or percentage growth of the S&P and obviously of the NASDAQ. So you've got 2 major economies. You've got the number 1 economy, the West, in America, which is lying, and you've got the number 2 economy in the Far East, China, which is lying. Both of them are lying to the populations, and both of them are lying to the world. They're just not telling the truth. And therefore, when it comes to saying, wow, we're in a major bull market and the market's going up, yes, the market is going up, but when you look at the fundamentals, there's a big question mark there, and it's really got to be asked, what is behind the numbers? Also this week, you've got inflation out in the UK. The UK has now been noted as the worst performing G7 member. That means that they're going to have lower GDP, if not negative GDP. They're going to have higher inflation. It's already got one of the highest inflations globally and definitely the highest in the G7 or official inflation. And maybe it's because the UK tells the truth more than Europeans and more than America. Maybe the American inflation is much higher than being stated. Who knows? But that's just me being cynical when it comes to numbers. As far as UK is concerned, they're expecting inflation to drop to headline inflation, drop to 8%. Core inflation about, I think it's 8.3, 8.4. Not really sure there. I've just got to check those numbers out again. But core inflation hasn't really moved. That's going to concern the MPC, the Monetary Policy Committee of the Bank of England, Andrew Bailey being the governor. Wage inflation in the UK is sky high, running at 7.8%. That's going to be a concern as well. Foreign exchange markets, you can expect the GBP, the pound, to continuously move higher simply because interest rate outlook in the UK is higher than the interest rate outlook in the US. So cable, pound, dollar, expect that to go to 131.5, 132, 133, continuing rising, could even go to 134. All depends if it consolidates in this particular arena. Bond yields in the US, expect those to continue falling as the outlook on interest rate rises looks to taper off. They're expecting one more rate rise in the US. I personally think there could be even 2 or 3, but that's driving markets being a little bit extreme and dramatic. But I think there's going to be 2 or 3 in the US more than the one that Wall Street analysts are expecting. It'll be funny if I get it right at the end of the year. I'd like to see some of the comments that I get a lot of pushback on from some of my colleagues and some of the viewers of how I always get it wrong. Not really. I got cable right and dollar yen right, so work that one out. As far as gold is concerned, gold is rock solid at 1953, right in the middle. Remember, gold becomes more attractive as the dollar falls, simply because in dollar terms, it becomes cheaper. And therefore, by the dollar falling, which is falling, their gold becomes more attractive and likely to rise further as demand for gold rises, going to go through the $2,000 an ounce barrier or upper limit. My long-term view on gold is that it's going to go to 2100, 2200. But that's a long-term view. Bitcoin moved all the way up to 31,850. It's come off all the way back down to 30,300. I'm still convinced that it's going to go to 35,000, even though I'm not a massive crypto fan and not a massive Bitcoin fan. But I'm just going with the trend and having to look overall where the trend is at. Remember, cryptos is very much binary. It's up or down. There's no real fundamentals to it. And it's no real economic analysis to it. It's just a pure gamble. That's why I'm not really strong in that, because I can't really see the fundamentals as far as Bitcoin is concerned or the cryptos are concerned. Moving on else to other precious metals and energy, by the way, just before precious metals, energy. So you can see energy stocks moving up slightly. Looks like they've bottomed out of the bear market and now they're beginning to creep up again. That could be beneficial for energy stocks, the petrol stocks and the gas stocks, etc. So looking at energy, that's obviously on the move up. As far as the overall stock market's concerned, equity markets, I would expect those to continue rising. As far as UK property prices are concerned, I expect those to continue falling. Even though there's a limited supply, the cost of borrowing in the UK is simply too high to keep the property market at where it is at. Well, I had to think about those words very quickly. Anyhow, that's the end of this particular broadcast. You can subscribe, share, comment. Also, I'd like you to have some feedback on what you think of the channel. Check out the Instagram, check out TikTok, etc. And that's it. Hopefully enjoying the channel. Over the next few weeks, obviously as the summer holidays come in, you might find driving markets to be a little bit erratic in terms of the production, because it'll be day in, day out, depends on the weather, and depends what's happening socially. This is Mayor Walensky with Driving Markets. Have a good day. Catch you later.